All right, guys, welcome back to Case Studies. I'm super thrilled to be back on here. Unfortunately, I took a little spill and I broke, you would never guess, but I broke my pinky. They gave me all of this, but nonetheless, we are back on. I wanted to kind of discuss a stock that I have recently found via one of my two screeners that I think is very, very interesting and is really worth taking a look at. So if we hop into Finviz here, I'm just going to simply go into the mid-cap growth and rebound. And you can see what makes that up once this loads. So mid-cap, buy or better. I want this well below a high, optionable, and then a lot of growth and a decent amount of volatility. And I just kind of briefly went through here looking at some of the charts, but one of the most I would say one of the biggest names on here, at least, was Adobe. So I went ahead and, I kind of checked it out or whatnot. Adobe, yes, it's a tech company, so their cost of goods sold is going to be very, very low. I just found that kind of impressive, but even so, their operating margin is really solid, as well as their net. I think that there's a lot of solid things going for this besides the price to book. I'm sure there's going to be an explanation for that, but forward PE, phenomenal, as well as, the previous PE it's actually not that high, so even if we don't want to model off of future growth, the trailing 12 months is absolutely fine as well. And I think there's going to be some solid growth, EPS, even if this stays in line, which it kind of seems to be, looks really, really quite solid. So now that I've kind of found a decent conviction on here, I kind of want to go see what analysts are saying, why, but also to kind of jump into the chart a little further. So if we exit out of here and we'll drop into Adobe into here and kind of see what I've been thinking. So if we go all the way back to, the monthly, I guess, we'll zoom way, way out, right? I think that this is a pretty obvious trend line that we should be following, right? So once we have that understood, we can kind of drop down to the weekly and say, okay, what's the structure looking like? We're right at this trend line, which gives us a nice margin of safety, right? We can always put our stop loss right around here at 310 and have a solid amount of upside. But we can also kind of take a look and see where are we pulled back to the relative move, right? And it's not going to be perfect because we didn't really make a higher high, but just to kind of illustrate, we're pulled back really, really solid to a nice level. And on top of that, we have multiple areas where we're taking out recent supports for liquidity. And you can see that we're doing that because there's a good amount of volume here. So people are still interested at these prices. So if I go ahead and just draw, just a simple line, doesn't have to be super impressive. Again, sorry, I'm doing this with one hand. If we drop down to the 4 hours, we can see kind of where we drew that if we go back. So, okay, we've drawn it there. We can also even mark out these guys. It's going to be the next liquidity spot to be taken if it chooses to. So just rip that. Trying to be careful. All right. Hold on. My non-dominant hand is not doing me any favors. There we go. All right. Two liquidity, or at least areas of liquidity have been drawn. So we'll come back on over here. We can see that pre-market, I believe pre-market, yeah, this guy was taken out. All right, so we did not get that second liquidity sweep. So essentially this one's kind of invalidated, has been already taken by this candle. We head up, but the market kind of wanted to retrace this again, and we tagged it right here, pretty much to the cent. It looks like it might have briefly went below. Yeah, so it almost looks like 323.31 was where that was drawn, and then 323.29. So this is a rejection, right, in a sense, because we did tag it, and it was a nice hammer candle with a good move to the upside thus far. Now, I think technically this is sound. I think that solid targets in the bullish direction are going to be based off the fib and psychologically 400 and even getting up to 450. And again, that analysis is in line with analysts as well. So we're seeing 455 as a 1 year price target, an average price target, right? So a lot of people that like this are liking it. There's not a lot of people saying sell. But overall, I think that Firefly and their other products are going to be their advantage against AI. I think that Sora is a little tough with people creating content right on there. However, I think that Adobe, being the pioneer that I believe it is going to somehow capitalize in this. And I think that investors are kind of seeing that first. Technicals usually lead news or fundamentals. So I'm liking to see this so far. So this looks like a really solid breakout. If we drop into the financials, just kind of display what we saw on Finviz. Quarter over quarter growth. Love to see it, as well as solid CAGR on the revenue and earnings. I think that all checks out there. We do not pay any dividends. So there's not going to be an inherent risk of holding option contracts versus shares overall. That's just kind of a you thing. If it's better, in your opinion, to hold shares or contracts, you're just not going to be giving any dividend risk of your option decaying. But I think we've kind of illustrated why I like this a lot. It's doing a similar thing as like LULU, where it kind of just like touches the low, decides what it's going to do. I think it's totally normal. We can kind of drop into here. The day is all right. I know that VIX is up a little bit, which is honestly kind of surprising. I thought that VIX was up today. Yeah, so VIX is up and SPY is up. That's interesting. But just want to reiterate that we are doing very solid for the month and 3 months still. If I do jump into Adobe, just to kind of craft a potential strategy, I get that Adobe shares are very, very expensive. Of course, you can buy a few outright. I think that's totally fine to do. If you're looking to take on a lot of risk or have the capital to buy a bunch of shares, this is what I'm kind of thinking. Again, you kind of target 400, 450. I think that's totally fine. Again, you see a nice pullback, and I think this is honestly really ready to spring into action. If I was going to look at any sort of option contracts, they would have to be pretty far out at least. Depends how you're going to play it, but I would say if you're playing a short-term move, March or February, longer term, I would go probably right around here. Buying a call that's in the money, I'd choose 330, 70 delta, or you could choose the 340 because there's a little bit more open interest. I would probably be looking for more open interest. So if we go to Max Payne, we can see kind of where these calls are being stacked if you're looking to buy a call. So if we go to Adobe, and we go out to a potential expiration that we wanted, not that. Go there. 350, again, there's not a crazy amount of open interest. Let's kind of search around. Go to here. Yeah, only 100 contracts. Which is kind of unfortunate, but it's not a make or break. I'm sure the spread is going to be fine. So I guess it doesn't really matter. We can always just click onto that option to see the liquidity of it. Unfortunately, it's about $200 for that spread. I'm sure if you came out to here, more so like September, the spread would be a little bit better on some of these. No, I might just have to play around, but you can kind of see the narrative that I'm trying to take and why I would buy call options if need be. Yeah, it just might be the spread and how it's going to be. For that reason, you can always buy shares outright. But if you are looking to utilize some sort of buying strategy with a sell call, without a doubt, I would probably say that going out to here, maybe post earnings, you can wait. But 20 delta right around here, that's going to be totally fine. Also keep in mind, like Adobe will be having earnings. So always remember to keep earnings in mind. That's actually really, really late. So you can honestly just sell that contract and be totally fine. But that's my take on Adobe. You can always read the Morningstar report. They're going to explain it pretty much better than me. They are professionals, but I think that I'm finding the right edge here, and I'm happy to see what you guys think.